And joining us on the show now is Rahul Gupta, Chairman and Managing Director of PP Jewellers Diamonds Private Limited. And with deep industry expertise, Rahul will shed light on how rising gold prices impact jewelry companies, the evolving demand trends around Dhanteras, shift in consumer preference, and the factors influencing the recent decline in jewelry stocks. He's also share his outlook on the challenges and opportunities the jewelry industry might face in the coming year. Rahul, first of all, season greetings to you, sir. How do you see the rising gold prices impacting jewelry companies? Because in my view, and please correct me if I'm wrong here, there seems to be a complex balance. On one hand, higher prices increases the value of the existing inventory, but they also drive up raw material costs, which can again squeeze margins. But additionally, as prices climbs, customers, they tend to become more price sensitive, possibly impacting demand unless, the companies, they adjust their making charges, isn't it?
See, the present rising prices are basis the international uncertainties. So gold price in India is derived basis two factors. That is price in national market, which right now has breached $2700. It is hovering around $2700, and also the dollar to rupee exchange rate, which is right now around 84.10. So the situation right now is that the price increase is not the final position right now. The price reaching at 81,000, it is not that it is stopping here. So in such a situation, the consumer doesn't get wary of rising prices. Rather, consumer feels that it's on an uptrend. So he wants to join the uptrend, and he's looking for higher prices, which is the situation right now. If the uncertainties do not end, which have not been ending since Ukraine war, and the financial uncertainties in Western world are increasing, the US has reduced the interest rates, a lot of public debt has increased, various central banks have stopped collecting dollars into their forex reserve. They want to switch to gold because of the sanctions. So once the Ukraine war is there, so US has levied sanctions on Russia, and Iran sanctions were already there. So the countries trading with Russia or Iran or such group of countries would need gold to trade in. That is the reason why the central banks are switching from dollar to the gold. In such scenario, the prices are not going to stop here. They are still on a bull run. They are still seeming to be going higher. In such situation, the demands have not impacted much. In value terms, rather, demands have gone up because people tend to spend little more. They feel that whatever fashion expense they were doing on jewelry, they would like to do investment also in gold, seeing the uptrend. The gold prices has gone up from, after COVID times, has gone up from 35,000 to 85,000 and 81,000 to be precise in today's date. So seeing that kind of rise, seeing the double the price since the COVID or even more than double, the people and the consumer have the confidence intact. And I don't see that the consumers will be backing off. But whereas, as you just rightly pointed out, that your own inventories have risen in the value, but any marginal new purchase is at a higher price. But the sales are there. The people don't do any, the jewelers never speculate. They practically do everything on a hedged basis. So whatever stock sells, they buy it out again, they earn margin, and they try to increase stocks basis that. So jewelers are not facing any kind of, I'll say, speculation gains or losses in the situation. Their inventories are going up. And the consumer at large, their demand is intact. Tomorrow is today is Dhanteras, and I would like to wish you all the viewers on today's auspicious day that they should buy gold. It's Lakshmiji's days, and the more the gold you have, the trend is showing that the happier you are with the higher prices.
Right. Rahul, and how has the demand for gold and jewelry been leading up to Dhanteras? Because I was reading this report from All India Gems and Jewelry Domestic Council, GJC. Now, they are predicting a 30% surge in retail sales this festive season. Do you think these numbers are realistic based on what you are seeing in the market?
See, the 30% increment is by virtue of price only. This year is going to be higher. Imagine since last year, the prices has gone up from 65,000 to 80,000. So 18,000, 30% of 60,000 is basis the price increment itself. The people, see, the people incomes have not gone up as much as that. So they, somebody who bought 8-gram coin would try to buy 8-gram coin next year. So 30% demand increment in terms of value has happened by virtue of that. So in quantity terms, the demands are same. Whereas in value terms, the demand value has gone up. And with this kind of price trend where 1 lakh rupees a kg seems to be 1 crore rupees a kg or 1 lakh rupees 10 grams is seen to be the next milestone. In such situation, I believe we'll see 30% based on price and another 10-15% increment in demand based on quantities. So I believe some 40-45% of increment would be visible in the current year. That's what my take is.
Okay, moving on. Now, Rahul, in the current economic climate, have you observed any shift in, consumer behavior or preference when it comes to gold versus, other types of jewelry? Are customers more focused on investment grade pieces or trending towards more affordable options?
You're absolutely right. The demand of the artificial jewelry is going up because those times when the gold price was 8,000 rupees or 4,000 rupees 10 gram, the affordability of gold was much easier, as a matter of fact. And people had switched to silver, but silver is also not stopping anywhere. It's 1.1 lakh rupees a kg. So in such situation, the youngsters are really having shift of demand purely on gold, and they are taking such options as to artificial jewelry. There is diamond jewelry which is getting made in silver also now. Earlier, diamond jewelry was purely made into gold. So yes, metal price is going up. There is a shift, but the investment demand is much stronger at the same time. The people who are investing into stocks are really making portfolio allocation towards gold, whether it is in physical gold format, whether it is in ETF format, or whether it is in gold bond of Government of India. So allocation has increased, but yes, per se jewelry allocation, gold allocation has increased, but per se jewelry allocation has reduced. There is no doubt the people really now pick up the artificial jewelry options. Also, they tend to preserve their gold jewelry with much precaution as in comparison to past because of the gold prices going so high.
All right, Rahul, that's on demand, but GJC is predicting a 30% increase in demand this festive season. You are predicting a 45% increase, but jewelry stocks now they have taken quite a beating in a market downturn. Some of these stocks are down as much as 18%, whereas Nifty has fallen about 8% from the peak. So purely from a business perspective, what do you think is leading to this adverse sentiment towards jewelry stocks?
See, there are two kind of jewelry business models. One is people who borrow in gold. So the banks, they extend credit in terms of the rupee or in terms of gold. So the sanctions of the bank in a banking industry is always into rupees in the monetary terms. For example, if a company has got 500 crore rupees sanction and the gold price goes up and he has been borrowing gold from the bank, so then his inventory depletes. If he had at 500 crores value, then he would have had a ton of gold stocks with him. The moment price moves to 80,000, so there'll be a bank squeeze. Bank would reduce the gold lending. He has to pay them off because the outstanding will become 800 crores and he can't afford to, neither the bank nor the borrower can take the borrowings on a rise. So all those stocks where the borrowings is in the form of gold loan, they take a hit because the inventory is reduced, the stock turnover ratio will reduce and the margins will reduce. This is the basic difference. And the ones who are absolutely on the long position and they are borrowing in the currency terms and they have the gold stocks in their books of accounts by virtue of fixed prices. So in those stocks, you would not see much movement. So once we see and compare the balance sheets of the different groups, different listed company will get an idea. The ones who are purely on gold loan, they take a hit on the stock and their interest rates are surely less. The gold borrowing is much cheaper as in comparison to rupee borrowing. Rupee borrowing takes a charge of around 9 to 10%, whereas in case of gold borrowings, the lease rate is around 3 to 4%. But the price movement going up by 30%, so the interest cost differential is not going to affect the bottom line. The real effect to bottom line will be the stock turnover ratio and the availability of stocks, which will reduce. That's the reason the gold loan borrowing companies, their stocks are downturn.
All right, but shifting focus and looking ahead, what are the biggest challenges and opportunities you foresee for the jewelry industry in the coming year, and any trends that you're picking up or market shift that could reshape the industry?
See, India is a growing market, so there's always an uptrend into the growth. There is no confusion. The rising prices are only threat for the quantity. The value term demands are going up. So the only threat a jeweler has is the manufacturing cost. The gold price goes up, there is a wastage for manufacturing the jewelry. So the wastage value keeps increasing. If I lost a gram while manufacturing a jewelry where the price was 50,000. So my wastage cost was 5,000 rupees. Whereas when I lose a gram while manufacturing, and when the price are 80,000, I lose 8,000 rupees. So the wastage cost is going up. So the industry would surely now equip itself with the better equipments for recovery of the losses. They would try to recover each and every penny out of it because it matters. Even the cost of the recovery, even if it's higher, it would be viable for the industry. So that's the threat, and this is the solution which would seem demand is not going to take a hit. We are a society where still there are people, I think 40 to 50% people may not be owning any gold at all. So those are the real future for the country for entering into the demand wagon.
All right, Rahul, one final question from me. I'll, engage you in some crystal ball gazing. What are your price predictions for gold by Diwali, by Diwali 2025?
1 lakh is the round figure which is asking now. The way prices have moved up from 50,000 to 80,000 post-COVID, and the way international central banks are switching in from their dollar reserves to gold, 1 lakh rupees a 10 gram may not be very difficult. It'll be, say, another half a year, maybe by next Navratri, we may see such prices.
All right, Rahul, thank you for giving us time here on News 9. Season greetings to you, your family and your team. And with that, that's a wrap on our Dhanteras special. Thank you for joining us, and special thanks to our expert guest who gave us time here and helped you making informed, investment decisions this Dhanteras. Wishing you all a season filled with health, wealth and happiness. Stay tuned to News 9 for more updates. Wishing you all again a very happy Dhanteras and a very happy Diwali.